What's up, fam? It's Brew Wax over here, Brew Wax in Maine, so you know how it is. So I've been gone, as I keep saying in my videos, but I'm back. I'm always back. I'm always there. I'm always making changes. I'm always doing better for my group, for my people, my group, for my community. I always want success for the people near me. So today is very simple. We're going to look at the structure of the market, because many people are confused how to mix fundamentals and technical analysis. I'm not going to get in deep depth about these topics, but what I'll do is actually show you how I do it my side, how I technically analyze the market, and how I apply fundamental analysis into my fucking strategy, So getting into that, guys, I want you to sit back, relax, take out your notebook and write the very important aspects I'm going to teach you today in this very, very valuable video that I have for you. You understand? So I'm going to start off with technical analysis. I'm going to look at the market in a technical perspective, where I look at the market technically and I see trend lines, support and resistance, all those important trend and technical based analysis. I'm going to start by that. Secondly, I'm going to look at fundamentals. Fundamentals is very easy and basic. All you need to know is the past fundamentals results, like in interest rates, inflation, job claims, non-farm payrolls, all those consumer price indexes. That is what you need to know about fundamentals, right? That's what drives the market. What's the goal in interest rates? What is the goal of the Fed in interest rate in the near future? What is the Fed saying about this, that? It is actually long-term based, but as a scalper, you can also kill, because when the news are released, we have major moves in the market as to grab liquidity, for the overall move that we need. So getting to that, guys, let's start the video. So we start off very simply but elegantly. We're going to look at USD JPY for our first pair. I already analyzed, but I explained in depth what's happening rather than analyzing on the video. So the first one is USD JPY. The second one is gold. The third one is NASDAQ and US30. So the reason why I trade these pairs, and there is a very specific reason how I trade them and when I trade them. The reason why I trade these pairs is because you get the most amount of liquidity when it's time for the news, right? So I trade USD JPY because it is an inversely correlating pair with gold, and it is an inversely correlating pair with NASDAQ and US30, but it is a different perspective when it comes to NASDAQ and US30. I would analyze DXY or the dollar index, but I prefer to check USD JPY because it is a much trendier pair rather than the DXY, which I can trade just for analyzing what's the direction, right? So I prefer USD JPY. It's more succinct, more trendier than any other pair outside the G or the U zone, right? So I trade these pairs during London session, during New York session, pardon me. I trade these pairs during New York session as soon as the New York session starts, or as soon as we have fundamentals. I can shift my mind to trade such pairs around those time. We find that New York session is around 2:30 I've passed 9 around there in South African time. I don't know about any other time zones, but I will put the link to a website where they tell you what's happening with the time zones. So let's get to it. Now I'm starting my video. So this is what we are looking at. This is USD JPY. We're starting off on the weekly time frame. We want to see what the fuck is happening with this market, right? So now we are already on the weekly time frame. We are seeing that we are bullish in the weekly time frame. We have a nice bullish market structure, respectfully bullish. The US dollar has been gaining strength over the Japanese yen over a long period of time. Now we're going to the dollar, to the 1 day, and we want to see what is happening on a daily, right? As soon as we get on the daily, we see a very succinct structure, very delicate and very nice to see. This structure over here, we can see, let's jump to the 4 hour, it's more succinct and more adverse over there. So this is the 4 hour, going to zoom out. As you can see, the 4 hour is bullish, right? I copied the same trend over here as to see the volatility of the trend. So on the 4 hour, we see every time we touch this resistant trend line over here, what do? We sell. Last time we touched it, we sold. Last time we touched it again, we sold. So now we haven't touched this trend, and now that brings the possibility for the dollar to do what? To buy. Looking furthermore, we're going to jump on a 1 hour time frame, or we're just going to reset the chart on the 4 hour. On the 4 hour, we can see that the market is actually on a consolidative stage because we have equal highs and equal lows, right? Equal highs and equal lows. It means that we are on a consolidative stage. Jumping furthermore on the 1 hour, we can see that it is less more of a consolidative stage. On the 1 hour, we have a trend-based support and resistance trend, right? You see that this structure over here is bullish. In this bullish structure, we see that we have higher highs and higher lows, right? So we are looking for bullish opportunities on this structure. Having to scalp this structure like this, how can you scalp it? You can scalp anytime you break above here during the session and you take profit around this zone over here, or you can scalp it by breaking below the structure and taking profit somewhere on this support trend line over here. If you want to be on the safe side, you can take profit around this zone over here. So that's what's happening with the USD JPY. We see that it's in a bullish wedge and it's in a bullish trend line on a 1 hour time frame. So it means that we're looking to do what? We're looking to take buys. Going furthermore, now we're going to look at gold. Gold has been having a very, very steep bullish momentum. It's been on an impulse move for the past 2 to 3 months, right? Gold has gained over 50 or 40% gains in a very short period of time. This is caused by geopolitical events such as elections coming. You don't want to put your money where it is unstable. You don't know what the new president might do to your currency. The new president might come in and just increase inflation to the max, just crushing the economy. So we don't know what is going to happen. So what do investors do? They go to a safe haven asset such as gold, oil, and Bitcoin. That's why we're seeing major pushes to the upside on this trade, on these pairs. So going back to the chart, and look at gold. Starting on the one weekly. On a weekly time frame, gold is bullish. It's been bullish and it's going to continue to be bullish. So, as you can see, guys, this is a nice market structure. We had a nice impulse move and a correction, and an impulse move, and are awaiting a correction because the imbalance is too wide right now since gold has been buying. Jumping down to the smaller time frame, we can see that gold is actually in an extra bullish impulsive move to the upside, but that doesn't mean we can't take trades, right? Having said that, this bullish momentum has provided a major imbalance in the market. As you can see, every time we have an imbalance, we restore this imbalance by a what? By a correction, you see. So now we've had a major impulse. Now we were looking for a correction. We go back to the 4-hour time frame. On the 4-hour time frame, we can see that gold, yes, it is bullish, but it has started forming a consolidative structure around the zone. You see, when it's impulsive, it starts to have a correction, bearish correction, bearish based correction. As you can see, this is bearish based correction, and then impulse. Now we're having a bullish based correction. So what does that mean? If you're having a bullish based correction, it means that the impulse will be bearish. You understand? Most of the time we find that the correction is inverse to the impulse, right? So now let's just look at the market in a 1-hour perspective. On the 1-hour perspective, we can see that market on gold has been bullish. Very weird, because USD JPY is also bullish. So now you can see the skepticism inside these trades and what is happening in the US, as they are continuing to grab liquidity and violating the trades law. So now, as you can see, we're having a corrective moves to the upside, and now we start to have bearish impulses, corrective moves. But now this is quite impulsive corrections. But they'll look at this. We're starting to have these big bearish candles. These amount of sellers. Sellers are willing to sell this market. But I'm not saying it will sell. I'm just predicting for you what is happening in price action, right? So looking at that, we've seen that gold has broken the previous highs, forming a new higher high, right? We've broken this nice was resistant. We've broken it. Now it's became a support. Anytime we break below this, it's now becoming a resistance. If a market is, if it broke below and now this zone has a resistance, it means that the market is willing to sell. To further confirm the sells, we are going to wait for a break below the support trend line over here and the break of this nice support zone over here as to confirm the continuous sell. But however, the market has two sides of the story. If the market respects this zone and wishes to break above over here, it means that the market will continue to be bullish until we hit this blue zone over here. So now we can see the structure, but the high probability of this trade is to have sells, as USD is bullish and is showing good data to continue to be bullish. So now let's just jump to NASDAQ. So NASDAQ is the top 100 stocks or 100 companies in the US. So you have to look at different aspects when you look at this is like a trading a stock market, but in a very different perspective, right? So you have to look at what affects the companies or the big bosses or the companies of the NASDAQ, right? The main companies you have to look at is Tesla, Apple, Nvidia, which is the is a chip manufacturing company that makes chips for computers, né? And other companies such as Amazon and all those companies combined. You can analyze what's happening in those companies, right? So what has been happening to these companies is that interest rate has been rising, and when interest rates rise, inflation rises. When inflation rises, the prices of products increase. When increase in prices of products, that makes the value of the company to increase. Right, let me check if this register on. Yes, so now let's just quickly look at what's happening. Going to the 1 weekly, bullish. The market is bullish, very nice bullish market structure. Very nice bullish market structure. As you can see, we had an impulse, a correction, an impulse, and we're also having higher lows and higher highs, right? So jumping back to the 1 daily, this is what is happening. We are also bullish, right? We are in a bullish market structure, very nice bullish market structure. Jumping down to the 4 hour, this is what we see. Pardon me for the mess that you see over here, but I'll make amends as for you to understand what's happening in the market. So now we're in this bullish consolidative stage, right? In this bullish consolidative stage, we've broken this support, this resistance, and we've created it to be a support structure. So what happens when you break support? It becomes resistance and we sell. So anytime we come below here, we're looking for sells. And we found a new resistance structure with night rejections candlesticks over there. As you can see, guys, we had a very bearish move to the downside as soon as we found what we hit this supply zone over here, right? Jumping down to the 1 hour time frame, we are seeing that the market on the NASDAQ is bearish. And what happens when the market is bearish? We look for bearish opportunities. So now we look for a nice supply zone that is most likely for a reversal, right? We can see that we broke this nice support structure and we turned it to resistance with a very impulsive candlestick. So here we have a very big imbalance that we might come and retest. So this is where the sellers might enter the market. But if we break above here, there's a very high chance that we also break above here and we'll also have a nice bullish momentum. But as you know, the NASDAQ is proportional to gold. So this bearish impulse continued by a correction, it means that we're in a bearish market structure. And what do we do when we're in a bearish market structure? We look for sells, right? So now you're willing to take sells on this trade whenever we break below the previous low, right? This is the previous low of the market. If you're a scalper, you'll sell from here. But if you are more of a swing trader and on the good side, on the safe side of the market, we would sell after we break this support trend line over here and also these two support structures which acts as a very important buy limit order for banks, right? Let's go to USD. Start on the weekly time frame. Remember, just to see the market structure. Of course, we are bullish. We've hit the high of the trend. As you can see, 1 2, that's where we reverse. We copy the same trend line, put it above. We see 1 2, and on the 3 touch over there. So let's go down to the smaller time frame. We see that on a smaller time frame, we actually broke a very important support structure. I want to show you in the weekly. I want to show you this structure. We've broken a very important structure over here. So now we have a very big imbalance that you have to balance by taking nice sells, right? That's the market fundamentals. That's the basic of the market. So as you can see, we have a very big imbalance. This whole bullish market structure is considered to be a very big imbalance in the market. So jumping down to the 4 hour, what do we look at? We are bullish, right? In a bullish market structure, and we've been bullish, right? As you can see, the market has changed momentum. We had a very big bullish candlestick, and now the candlestick started to change, and the market structure started to change. If you look at the bullish momentum now, it started to turn as a correction, and we started to have very big bearish candlestick followed by a bullish correction and a big bearish candlestick followed by a bullish correction, right? So what happens when we see such structures, right? Jumping down to the 1 hour, we can clearly see that we're in a thin bearish structure. So this is what we do. You look for buys whenever we break above here, because this is resistance. When we break resistance, it starts to turn to support, and we always buy at support. So now, if we break below this support, we're now becoming bearish because we've broken this nice support trend line, and also broken the nice support zone over here, and we also broke a support structure of a nice correctional trend over there, so now there's a high probability that the USDT might sell, but furthermore, it might not sell today. It might sell on June, where the Fed actually decreases its interest rates. What's up, guys? So today we are going to look at the very important aspects of a saying. I was going to tell you about fundamental and technical analysis. So fundamental analysis is very important and is very simple to view at. Just look at the market in an economical perspective rather than technical perspective. We just draw lines and predict what's going to happen. Right now, you just look at the economy, analyze what's happening in the economy, what is happening to the interest rates, what's happening to the inflation, what is happening, everything that affects the dollar, the value of the dollar. That's what you look at. So now we're going to jump straight to the charts, and I'll show you what's happening. Every news that is not major, only want high volatility news. As you can see, all these news are high volatility. So top 5 things to look ahead, to watch ahead in the market the week ahead, right? So investing.com, US inflation data will be sharp focus in the coming week after Friday's blowouts jobs report raised to the prospect for that the Federal Reserve may delay interest rate cuts for longer. So now if the US Fed delays interest rates, it might keep the interest rate steady, which will cause the dollar to rise in a steady rate, or it might increase the interest rate, which is give the dollar a very big impulsive move to the upside, right? So big banks kick off earnings season. The European Central Bank is to meet the geopolitical risk looks set to continue to support oil prices, right? Oil prices have been increasing because Israel and Iraq decided to want and decided to form a war with Israel in contemplating the oil, making each barrel to be more expensive than ever before. So US inflation data. The US is to release consumer price inflation figures for March on Wednesday, with economics expecting core inflation, which strips out food and fuel costs to slow to 3.7. Remember this, when inflation rises, what does that do to the economy? The products, or the amount, the power of the dollar decreases, right? Let's say maybe inflation rises and you have $1 and inflation rises. That dollar will be equivalent to 50 cents. You understand? So now the Fed is deciding to cut the interest rate to a much lower rate. This will cause the value of products to decrease, and this will affect the NASDAQ and the USDT to decrease in value, because you know what? If the value of a product in the top 5 US stocks or US companies decrease, it means that the value will also decrease, right? So now that approach is something they're expecting to a more moderate increase. The inflation data comes out after the numbers out Friday showed US data far more jobs than expected. Last month, wages rose steady rates, indicating that the price of living may be slow moderate. Okay, it won't go down too much. Fed minutes, because this one is very important. This is the FOMC minutes. Important, the most important. The Fed is to release the minutes on its March meeting on Wednesday, where officials continue to expect 3 cuts for the year at bit, with conviction relative to the forecast from the end of the year. In the wake of Friday's jobs data, markets are now pricing 2 rate cuts this year, down from 3 previously. Private market watchers will also get the chance to hear from the New York Fed President John Williams on Thursday. On Friday, Fed Governor Bowman downplayed emergency cutting rates and warned that should progress on inflation stall, that might even push the central bank to raise rates again. You see that? You see what's happening? There's a possibility that the Fed might increase the interest rates. So now we know that the interest rates of the US, they are not looking forward to what, to decreasing the interest rates in the US. So now we know that the US dollar is more bound to buy in the fundamental perspective, or in a fundamental perspective, right? So now in the technical perspective, we will look for entries in a break of a resistance, or in a break of a resistant trend line. That's how technical and fundamentals, you mix them together. So now quarterly reports from major banks will kick off earnings season in earnest demand. Investors are counting to robust corporate profit this year to support rising valuation as the stock market has railed to record high. SPA fell more than 9% following it. As I was saying, the interest rates, if the interest rates, they rise the interest rate, inflation automatically rise. When inflation rises, the value of a product of the top 5 companies in the US will rise, forcing the market to what? To go upside, forcing the NASDAQ to be bullish, forcing US30 to be bullish. But what happens if the interest rates are cut? Inflation rates, they slow down, they go down, you know what I'm saying? Or sometimes inflation rates can be independent from the interest rates, and they can cut inflation, which will affect the value of the product on the top 5 companies in the US. So that's it for market, for fundamental analysis, guys. Thank you so much for tuning in, and I really appreciate the love and support that you've given me. If you've reached this far end of the video, you really are the best, and I thank you. It shows your continuous love and commitment in this forex journey. If you have any suggestion, leave a comment and I'll make amends in contemplating that request. So now, thank you very much for watching. Make sure you subscribe and leave a like button for the video. Thank you.